What's going on, everybody? Welcome to a capital hungry market update and recap webinar and live session here. We are just going to be recapping some of the fundamental and technical events going on in the financial markets so far to start off the week and through the first, of course, London and New York session to start the week, as well as looking at economic events to come, investor behavior and market sentiment, as well as price action and market structure across gold, GBPJPY, GBPUSD, EURUSD, USDCAD, and the US 30 stock market index. You know what? Maybe we'll even throw in some oil analysis in there as well today. Okay? And then we're going to be mapping out trade ideas on these various pairs, precious metals, commodities, as well as the US stock market index for intraday and scalp trade ideas to possibly use into the next coming sessions, being Asian, London overnight, and of course New York tomorrow. How's everybody doing? Can you guys hear me properly in the YouTube chat? There's probably not many people in here as it's end of New York session, 5:30 p.m. Eastern, and this is more of a market update and recap webinar. But it's been a while since I've done one of these on YouTube, and it's always fun to do and recap what's going on and give out some analysis to the community out here. So anyways, first thing we're going to do is highlight some of the economic events as well as headlines we have been focusing on just to open the week. For those of you who may or may not know, the main focus to start off the week so far has been some of the drama and conflict going on in Afghanistan regarding the Taliban. Now, this is not something that's going to shake the financial markets or something that's going to have a long-term negative impact on the financial markets unless we were to obviously have this escalate into real physical conflict between countries that are more heavily involved on the main stage. For example, the Chinas, Russias, US, some various European countries, and actually have conflict that comes out of it. Otherwise, it has been some short-term fear, uncertainty, and doubt that has caused a little bit of pullback on the stock markets to start off the week, and a little bit of this upside spike, for example, on the Japanese yen standalone, which we know the Japanese yen is a safe haven currency. We had this spike up on the volatility index from these previous lows printed, obviously getting faded out later in the day. And when we go to look at our global equity markets from across various regions, whether it be on the UK, USA, Germany, we just started the week off having that pullback from all-time highs with that little bit of uncertainty and short-term fear. Right? So very similar movement across the board, except the US stock market recovered instantly and is already at new all-time highs. So I know that a lot of people, when they're looking to read market sentiment or investor behavior, they can see this flood of negative headlines, regardless of what resource you use, whether you're reading off of Bloomberg or Twitter resources or watching CNN. You see this flood of potential negativity and uncertainty that can come and impact the mainstream media and financial markets. This time being, of course, this whole issue regarding the Taliban infiltrating Afghanistan further and potentially taking control of power there. But for us as manual retail traders and day traders, we have to be able to play this short-term fear, uncertainty, and doubt accordingly, but keep in mind the macro perspective and image of what the overall macro sentiment is telling us. And overall, it's going to take a lot more than just these short-term conflicts regarding the Taliban taking over the Afghanistani government and potentially taking over Afghanistan in the long term to really shake up the global financial markets. But we can see that it had that little bit of a pullback on equities that also lined up with the start of the open for the new week here, which is also getting equally corrected across regions as well. And even when we're looking at the volatility index here, we had this aggressive upside spike, but potentially equally getting faded out, which shows us fear and the just alone in the North American equity markets is potentially dissipating. And again, even though we're looking at the Japanese yen here, on the intraday time frames, you have to keep in mind that the Japanese yen structure is still relatively bearish on the higher time frames, right? We've still, ever since the optimism in the markets from the central bank support for respected countries, the vaccinations across the world, coming out of that initial fear and pandemic state, our primary safe haven currencies like the Japanese yen, the Swiss franc, the US dollar, on the higher time frames have of course been more bearish as smart money order flow is coming out of the safe haven currencies and going into the equity markets, right? It's going into where the support of the central banks is directly being injected to, which is to support their respective countries' economies. Of course, the Federal Reserve, in relation to talking about the US economy, has been purchasing corporate bonds, ETFs, government bonds, doing quantitative easing. The stimulus that was given out to people in terms of checks to replace their wages during the pandemic. There was so much US dollars printed out and money getting flooded into the markets and US economy that smart money investors and traders, they ride the wave with the central bankers. They're the ones who are actually creating the market waves and are actually dictating the value of these currencies. But something we have to look out for, obviously, as we've had a very strong economic recovery since the initial pandemic fear. I'm just talking in long-term perspective now, is obviously when the Federal Reserve and these various other central banks start to raise interest rates and start to taper off the stimulus support, which we are getting closer and closer to. And we've even gotten a signal that central banks are getting closer to there, where if you guys notice, the Reserve Bank of New Zealand just the other day raised their interest rates already, and they're one of the first to do that, right? But the Asia Pac side, in terms of dealing with COVID, did deal with COVID first before Europe and North America, as COVID started in China and impacted the Asia side as well as the Asia Pacific side, being like New Zealand and Australia first. So they were really first to be in lockdowns and take action with that. And China came with a huge recovery on that as well, very fast. But anyways, I'm just blabbering there about a little bit too much. Back to the point here. On the higher time frames, with the support of the central banks coming out of that fear state of initial pandemic impact and lockdown, all of that fear being priced in, the money being flooded into the stock markets, you can see that our safe haven currencies like the Japanese yen, or if you look at the US dollar, have been bearish. Yes, we're having this short-term upside move, failing to break these intraday lows on the Japanese yen, but you can see that this is the last price sensitivity area here where we had an aggressive downside move pullback that took us into these lows printed on the yen. So to break bearish market structure from a technical price point perspective, you'd be having to break above 92.5. So the Japanese yen having this pullback is nothing out of the ordinary. It has a lot of, it's just the way the market behaves and how the market waves get created. So even though we have this short-term fear within that boosted the Japanese yen and volatility index, if the yen doesn't break above this 91.5 price point, I can easily see it potentially turning bearish again and coming back down to revisit these lows. As from a financial market perspective, markets are still very optimistic. Like, yes, this Taliban news taking over Afghanistan is terrible news. It's not good that all these people have to flee from their country, but it's not something that investors give a shit about right now, if that makes sense. Maybe oil investors, if it leads into some actual conflict and helps oil prices go up further, but does that make sense to everybody so far? So overall, from a macro perspective, whether you're looking at the Japanese yen or whether you're looking at the dollar index too, you can see the dollar and Japanese yen have been in that overall bearish market structure with potential to revisit these lows. The dollar is really only going to go bullish from a macro perspective when the Federal Reserve increases interest rates, reverses quantitative easing, decreases asset purchases, and obviously follows through with the tapering talks. But that doesn't look like it's going to be anytime soon in the short term, right? But anyways, just wanted to discuss that we had that little bit of short-term market fear just to start off the week. So we had that pullback on equities there. And obviously when you're trading a pair like GBPJPY, you would have this downside move because your risk currency basket is weakening and the Japanese yen is holding that short-term strength, as well as you have that decline on the UK equity markets in the short term. So I was talking about that in the YouTube short that I uploaded of why we were taking advantage of some of these pullback sells on the higher time frame on GJ. But within this market update webinar, I just want people to be cautious about these significant price points we are at on our safe haven currencies and looking at overall market optimism. Okay, so what I mean by that is, yes, we had this little bit of a pullback on equity markets, but global stock markets are still extremely bullish. That means the people who move the markets, whether you want to call them the whales, the market makers, smart money investors, one percenters, I don't care what you want to call them, they're still very confident in keeping their money pooling into the stock market. We can also see that where the dollar is failing to break those previous highs to the left and turning bearish, as last week the inflation data was very underwhelming and not as impressive as the job sector data, and then we had a very poor consumer sentiment and business survey report at the end of the week on Friday showing that we're not ready to start tapering yet. So even if dollar does a bit of a pullback here, it still has the potential to repeat and go back down to these 91.7 lows. We can see volatility index just instantly faded out that upside spike, and volatility index is still relatively bearish, showing us market fear is relatively flat. And the Japanese yen, if it doesn't break this price point I was showing you guys to the left, on the higher time frame it's still bearish. So it was fine that we played that upside spike, but we want to be very cautious in this area of the Japanese yen standalone going back down to its intraday lows, as overall money is outflowing out of the safe haven currencies and going still into the risk currencies. So an example of this is when we look at GBPJPY, this is the 1 hour time frame. But when you really zoom out to the higher time frames, you're having this pullback structure. Yeah, that's all fine and dandy, right? We're still respecting this pullback structure here, which is from these highs printed. That's just how the market behaves. If you guys watch any of my videos, I really define market structure in as simple ways as possible. As you have buyers enter the market from these potential low price points and from demanded price points and that flood of inflow of liquidity, you obviously get the price of this trading instrument here being GBPJPY pushing to the upside. The whole point of the markets is to make money on your investment, and as you have these profit taking moves where there's so much trading and there's so many participants in the market with modern technology, and especially with the automated trading that institutions do, from high frequency trading all the way down to their positional trading as well, that you're constantly having transactions executed in the market at every millisecond, less than milliseconds, and this constant changing of hands across time frames. But we majority look at it through our technical charts that creates these waves, right? But anyways, that profit taking move creates a potential pullback. You have sellers jump in hand to relieve the buyers out of the market, push price down to a more favorable demanded price point, and then continue back up when more buyers jump back into the market and you have that order flow to extend higher, or you have those order blocks created in continuations to the upside. This can be both easy to identify on the bullish side and on the bearish side, right? So when you're looking at GBPJPY from the pandemic crash period, where these fire sale prices were set up for the one percenters and for the smart money, what's the only thing you've seen GJ do for the last year and a half? You've only seen it print highs, pull back, fail to break bullish market structure, and continue up or consolidate at highs and then break out, and that's it. Just bullish market structure, higher highs being printed, higher lows being printed, and failing to break market structure, and that's all you have seen, right? Whether it's in a short-term period or whether it's here in a long-term period, that's it. If you want to keep it very, very simple in that sense. Okay, so when I'm looking at GJ on a macro perspective, this is the last price sensitivity area around 149, where we've had buyers consistently enter the market and at least take us into these new highs being printed, where I see this pullback from here as profit taking. And then you can see we had this very aggressive bounce here again as well, coming all the way here, but still failing to break that corrective structure. So yes, GJ does have the potential to maybe double bottom at this area or dig a bit deeper. But we have to be cautious. If Japanese yen fades out that strength and ends up turning bearish and global stock markets continue bullish and that short-term fear gets faded out, well, guess what? Buyers are going to be jumping back into the market, and then like any pullback phase you have, as soon as you identify that pullback phase and its completion, technically, that we do as retail traders, then you have that upside range to at least revisit those previous intraday highs that were printed. For example, here would be going back to 156. Does that make sense for everybody so far in the YouTube audience? So what I want you guys to do is use the UK equity markets as just sort of a fundamental confluence of investor confidence within the UK stock market. It just shows you that overall, right? And also be able to identify that structure now and say, okay, and also use the Japanese yen as a confluence there as well, right? So we have to be very cautious as we're coming into this price sensitivity area down here, because what I can potentially see happen is if we come down to like the 150.5 areas and fail to break, we can have buyers jump back into the market from this area, this being the new weekly candle pullback. And as soon as we make our way back up above 152.5, 153.2, you easily have these intraday targets and day trade targets to start potentially reaching back to these 156 highs, as that's how GBPJPY has been trending for the last year and a half, with the support of the central banks and the weakness higher time frame in the safe haven currencies, right? So what I'm going to start looking for on GJ when I come here is, you can see we have this corrective bearish market structure for the time being. We had a very aggressive rebound above around 151. I do see the potential to start seeing exhaustion at these areas, especially if the Japanese yen standalone fails to break this previous intraday high as well. Okay? So if the Japanese yen, when it opens back up during New York session, you see Japanese yen movement stand alone by itself, fail to break these highs and start to turn more bearish and go back down, volatility index continue bearish, global stock markets continue bullish, even dollar continue bearish as a safe haven currency as well, then we have the potential for GJ to technically create a double bottom here and then start shifting structure for the buys back to the upside. Okay, so the trade ideas I'm looking for on GJ is 151 flat is a make or break point. Technically, if we have closures above 151 flat, just like this rejection here, that's a more of a high risk, high reward buy area, right? The reason why it's high risk, high reward is because your confirmations are really coming from failing to break this previous low and technically still closing above 151. The safer buys is if you fail to break these lows, then come above 151.2 and 151.5, because then you're starting to show more sellers exhausting and exiting the market from these lows, buyers jumping in, correcting this downside move and breaking out of that bearish structure, as well as market optimism. Okay? I would only be looking for further sells on GJ. This is the buy path I see on GJ. If we fail to break these lows and this pathway of price, those green boxes would be entry areas for me for intraday style trades with the confirmations I just told you, and especially if Japanese yen goes bearish by itself and the UK stock market continues bullish, it's just more confluences. Now, don't forget though, that overnight we do have some UK economic data on the docket. It's only obviously August 16th right now. We have the Reserve Bank of Australia meeting minutes at 9 p.m. Eastern, but overnight during pre-London hours at 2 a.m. Eastern, we have the UK jobs data. It's the job change and the average earnings index. So this is also going to be a confluence to add into here, that if this data is also good, positive data in the labor market, as well as these technical confirms and the other confirms I told you, then you know you can take these buys. And you don't have to take the high risk buys here, right? You can wait for the double bottom rejection and wait for the shift in structure and still catch great ranges to the upside when you're looking at your higher time frame targets and even intraday level to level targets between the PPLs. Okay? Now, the only way I'd be looking for GJ sells is if we have continued respect to this corrective structure lined out here and poor economic data from the job sector at 2 a.m. Eastern and a break below these previous lows. Then I'd be looking for sell entries with those confirms at the red boxes down to these deeper targets on the higher time frame for a pullback on the higher time frame. Because remember, when we're looking at the higher time frame here, and for the time being, we're still respecting this pullback structure for the time being. You don't want to start jumping in buys. And this is why, for example, let me break this down for you guys. This is why this area is high risk buys. Because, for example, like this, you can get this downside move and then take the high risk buy failing to break below there, right? But if you fail to break that bearish market structure still, then you can't extend those buys or take further scale in entries. So that's the same type of idea here. GJ could come down to double bottom here and fail to break, and you could take those high risk buys. But if price action still shows us that we're not breaking this bearish corrective structure for the time being, you obviously want to trade manage accordingly and not hold those buys, as we can potentially extend a bit deeper because on the higher time frame, again, don't forget, GJ could still come all the way down to 149.5 and still maintain its higher time frame bullish market structure to continue back up. Because overall, remember, what's the overall macro market sentiment still? We still have the support of the central banks for their respective economies. We have more and more people getting vaccinated. We have the safe haven currency still bearish on the higher time frame. We still have the global stock markets bullish. So why would, if you were a smart money investor, you have to think in the eyes of the market makers. If you were in GJ buys from a year and a half ago, when that pandemic crash happened and that fire sale set up from the 120s, 125s, 130s, 135s, 140s, why would you want this greed train to stop? You don't mind these little periods of pullbacks for the profit-taking moves and to scale in potential more investments and entries, but why would you want this to stop? Same thing on the stock markets right now. Why would they want the greed train on the stock markets to stop? The guys who have been riding with the central banks on Dow Jones since 18K, since 20K, 25, 30. You know what I mean? And that's the same thing for global stock markets right now, or all of these risk currency against safe haven pairs. Okay? So that's what you have to be a bit cautious about, but those are the trade ideas I see on GJ. And remember, you can always re-watch this webinar. I gave the fundamental and technicals and exact price points and pathway I need for buys, and what I would also need if we are to adapt to sells. Okay? Because remember, at the end of the day, we're retail traders and manual retail traders. We're trying to dissect and follow the moves of the market makers. We're like krill trying to attach ourselves to the whales and eat the crumbs that we can, where the crumbs in these trillion-dollar markets is more than enough for what we need to start developing our capital and potentially living a life of more freedom after an intense amount of hours of sacrifice, effort, trial and error, psychological development, and developing your technical and fundamental skills. But anyways, that's the trade ideas on GJ. You can always rewind and rewatch this webinar. Obviously, you look at the Japanese yen for confluences and the movement there. It's closed right now, but it'll open back again at New York. And look at how the UK stock market's going to be moving as well. Don't forget about that. Still very bullish if you zoom out on any of the global stock market indexes, showing us the same rinsing and repeating pattern across the world, right? It's just how the financial markets work. And don't forget for GBP pairs overnight, if you're trading London session at pre-London, we have the UK jobs data, the job change, and the average earnings index. All right. Now, the reason why I wanted to do GJ first is because for our US dollar pair analysis, and especially for gold analysis, where we primarily have a high probability chance that the dollar is going to range until we get more information from the retail sales in the morning. But more importantly, when Jay Powell speaks, now when Jay Powell speaking at 1:30 on Tuesday, it's not like an actual FOMC conference or him testifying in front of Congress. It's more of like an educational summit type of thing for students, but he still will be taking a question and answer period from various students and interviewers and economists that may be there, right? So we might see that the US dollar may range technically, as investors might be on edge until we get more information from the core retail sales data, as well as when Jay Powell speaks. Now, U.S. economic data has been a bit imbalanced. What I mean by this is the prior weeks we saw an aggressive rebound in the job sector, right? The non-farm payrolls was still heavily rebounded, and unemployment had a huge decline. And then we saw the week after, JOLTS job openings showed more job openings within the U.S. month-over-month figures, and also the jobless claims figure, all from last week and the prior week. But the inflation figures from the consumer CPI side, the consumer pricing index, and the producer price index is still showing that inflation is not as controlled as the feds are saying into their projections, as well as economic activity through consumer sentiment and on the manufacturing side still is pretty lackluster. So I do want to see these retail sale figures in the morning because it's going to give us a lot more confluences on the US dollar. Basically, if these sales figures are poor, I'm going to be using that for our US dollar weakness bias, which I'm still more on a US dollar bearish bias. I'm more global stock markets bullish, US dollar bearish, even more on an intraday gold bullish bias as well if this data is poor and still shows us that interest rates are going to remain cut, inflation's still going to be increasing, and obviously those are fundamental bullish confirms for the precious metal safe haven gold. And also, after that data, I do want to see if Jay Powell comments anything. Most likely he won't, but it still is something that's going to have investors more on edge there, right? So that's the main things to focus on for this market update webinar. Obviously, we have the rest of this economic data later in the week. But that's why I wanted to do the GJ analysis first, because it's a bit more clear cut with Japanese yen movement, and we don't have that. We don't have some strong impacting factors like Jay Powell speaking. But that's something we have to keep in mind. Now, gold analysis. If you guys have been following along since this market maker move here we saw, right? You would see that I don't see this. Let me explain. This downside move I do not see as a flash crash. I see as a market maker price setup for the whales, because where it came down to was far too surgical and far too exact in how we read market structure in terms of price points, okay? I don't read market structure with a trend line. I look at previous highs or lows and price points of interest. Remember how I said the market moves up in two fashions? Now look at gold. Upside moves, consolidate or pullbacks, upside moves, consolidations, continuations up, pullbacks. That's all you see gold did, right? Literally since the 2019 lows, 2018, 2019 lows. Okay? This is the last price sensitivity area where you had a high printed here, 1680, a pullback phase, buyers jump back in the market, consolidation phase above 1680 that took us into these new all-time highs on gold at the 2050s. You have this massive aggressive pullback that just conveniently goes to that exact same price point again, having this massive upside move from 1700 to 1900 again. And then you have this quote-unquote flash crash. No, that goes just conveniently to that price point again. You guys think that's a flash crash, or do you guys think that's a market maker price setup? I think that's a market maker surgical whale price setup. What do you guys think? That's for that to be a flash crash, it's way too exact. And when you're looking at the higher time frame structure and price points of interest, it's exactly at 1680. Let me zoom in here and show you guys. Look at this. It's the exact last previous high. And that's surgical, right? So exactly. So anyways, ever since then, we had this bearish candle close extremely weak with this rejection and a bullish correction for the time being, with the potential of still holding intraday bullish market structure to take us back into the 1800s and potentially 1850s. When I'm looking at especially the intraday structure here now, you can see the white lines are our historical key levels based on 2008 to 2011 price points in the financial crash period. And then the rest is just market structure, right? So from these price points, from these lows, we've had this bullish market structure develop where regardless what time frame it is, what are you guys seeing here? Very simple. Keep it very simple, right? So on gold, especially as we're trading gold against the US dollar, I'm expecting two things now on gold and extending our buy bias. All we've been playing in Capital Hungry is pullback buys, breakout buys, pullback buys, breakout buys. Next set here, okay? Now, we don't essentially have to have a pullback to 1781. Remember, the market can move up in two fashions. We can have a upside move, consolidation zone, and then breakout. We could easily just range here, break above 1789 and continue bullish. All right, so this is the trade ideas I see on gold, with how the fact that US economic data is still relatively weak, US dollar is bearish, inflation is still relatively high and on the yearly not towards economists' forecasts of deflating, and we're still seeing that interest rates are being kept cut on the US side from the Federal Reserve, which is still bullish confirms for gold. And we got the whales in from those 1680 lows. The market makers got their price set up with that impulsive move we saw on Sunday with that market open, you know what I mean, last week. All right, so this is what I see on gold. Either we're gonna consolidate here, and the thing is with these consolidations is it tricks traders who are very closed-minded and technical only and don't understand the fundamentals and economics of the market, and they think, oh, a resistance, time to sell, reversal coming, this is too high. You know what I mean? It's not how the market works. Two things are going to happen here. Either we're going to consolidate and take the break and retest buys above 1789 key level and extend in this fashion, or you're going to let the pullback happen to retest previous highs at 1781, as well as bullish market structure developing, which is just defined by a trend line, but it's based on the price points, and take the higher risk, higher reward buys here. And continue back up. I would only be looking for gold sells with clean breaks below 1772, strong US economic data if the retail sales is very good, but I'm not personally expecting it to be good. I'm expecting it to be a bit lackluster or just sort of monotone, but obviously we're going to see what that's during New York trading session tomorrow morning. I would only, so the buy path, if US dollar stays bearish, US data's weak, we either have the pullback to 1781, break and retest above 1789, and the green boxes are where I'd be entering buys with those technical and fundamental confirms. Okay, that's number one, which is pretty much extending our continued buy analysis from our obviously capital hungry private members know. These type of market update webinars are done daily in the private channel, and then we do our daily trading sessions, the New York session after, you know what I mean? So they already understand this bias, but I guess I just want to repeat it for the free community. Now, I would only be looking for gold sells if the US dollar gains strength from the data being stronger, we fail to break these highs and we break and retest below 1772. That's the only way I'd be looking for gold sells. That's the only way I'd be shifting out of my buyer bias. I would need a break of this technical bullish structure. I would need US dollar strength, and then I would need rebounded US retail sales data, because that would show me less demand for gold as a safe haven, less reason for investors on the intraday periods to pool money into gold. They'd rather go put it into the stock market. That's the only way I'd be looking for sells. Otherwise, this is my main bias. All right. So that's the analysis so far in terms of market sentiment, some of the economic events, and on gold and GJ. Now, GBP USD. Let's start from the higher time frames here. We can see is in a very messy range, but because this is a risk currency against the safe haven pair, the US dollar being a safe haven currency and more bearish, and the US dollar is also the world's reserve business currency, so it holds more strength in whatever pair it's in, regardless if it's first or second, it holds more strength. We've only had this bullish market structure, right? We can't say just because you draw this trend line that this is a break of bullish market structure. Structure is based on price points, not just lines on a chart. The lines on a chart we draw are just for our technical analysis to make it easier for us to gauge the structure and price movements and so forth, right? You just really want to go by price points of interest. Same idea here. You've only had GU do upside plays, pullbacks, upside plays, consolidations, and continue to the upside, right? Now, this right here and here in this area is the last price sensitivity area where buyers took us into highs being printed. You can see even this aggressive pullback here still failed to break that price point of interest. We're more now just in a higher time frame consolidation in range. Okay, but within this consolidation in range, when you zoom in, you can start to see some repetition technically at this price point of interest. Let's map this out here. Okay, so remember, this is the last significant price point of interest that you would need to break below to break bullish market structure. Now you have us in a higher time frame range between these lows and these candle body highs. But let's map out some of the structure you have that takes place here. You can see that from these highs, you have this pullback structure here too, right? Until you fail to break these price sensitivity areas and get exhaustion by sellers at these lows. Okay. Then you can start to see you have these upside moves that break above the bullish market structure, or sorry, the bearish corrective structure. Okay, very interesting. Then you can see you have this bit of a pullback play here on the daily time frame that goes to retest the broken structure, but as you create some more refined bullish market structure on your way up here. Okay. Wow. What do we have here? A bit of a pullback play here so far. But we do have the potential for this happening. Now, if US dollar stays weak like we want it to and UK equity markets continue bullish and we don't break these lows here, what do you guys think could potentially happen when you're looking at this? Right? Because fundamentally, GBP economy has still been rebounding since the pandemic state. We're still bullish on the higher time frames. We still didn't break that price point of interest. We're having this technical repetition. US dollar still bearish on the higher time frames and even more on the intraday time frames right now. Really, now when we start to zoom in here even more on this piece of structure here, similar to here, here we got a bit more bearish structure on the intraday time frames. Essentially what I'm looking for is US dollar weakness and then pretty much a break above these candle body highs here around 1.388 area, and then buys back up to these previous highs. Okay, so now let's zoom in more on the intraday time frames here. This is the two buy areas on GU. Ready? High risk, high reward buys. New daily candle, double bottoms at these lows and higher time frame key level, fails to break lower. This is if UK equity markets continue bullish, that market fear gets faded out of the markets, especially when you see if Japanese yen goes bearish, dollar goes bearish, and obviously if we have these price action confirms when I'm looking at the higher time frame and intraday time frame here. Targets at least 1.4 and potentially higher. I would only be looking for a GBP USD sell path if we get a clean break and retest below 1.378 and we have US dollar strength when we're looking at the dollar index, and a break below this price sensitivity area and key level. This is the only way I'm looking for GU sells. On GJ, on GU, and gold on the higher time frame, I'm still in that bullish bias and explain to you why. And I just gave you guys the sell side options. As retail manual traders, we do need to stay adaptive. And at least if you map out those different trade ideas, once it starts to play out in front of you in real time, and you map out and you line up your confirms, like, okay, look, our buy analysis didn't play out. We broke below 378, but now we're getting the retest. US dollar strong. The UK equity market's actually having a bit of a decline. All right, let me be adaptive and take advantage of that analysis that I did there too. You know, but my main bias is still looking at global optimism, UK equity market staying pretty hot, US dollar and Japanese yen still being bearish on the higher time frames, and so forth. But I do like to give analysis for both sides of the coin, so just so we can stay prepared and stay adaptive. So gold, GJ, GU. Let's go to EURUSD here. I don't want to make this too long. How long has this been going for? Can somebody tell me? I might do the rest for the private chat. This is too long on the YouTube. No, I'm kidding. Let's just finish this off quickly. Now, whoa, EURUSD on the daily time frame. What do you guys What do you guys see here? What's the last price point of interest that you would need to break bullish market structure? Same thing. Upside moves, pullbacks, breakouts, upside moves, pullbacks, continuations to the upside. Look at the same thing on EURUSD, GBPUSD, GBPJPY. Around 1.17 flat is that higher time frame make or break point while still maintaining that bullish market structure. Same thing now when you're looking here. Let's zoom in more here with what we can see. This looks very high probability to me, especially if US dollar stays bearish on the higher time frames and we don't break below 1.17. It looks like the algos are just keep making their money repeating that repetition there. That technical repetition that we observe technically, but that order flow repetition. Okay? So this is a very, very key price point that I want to look at 1.7 that we failed to break below multiple times. And you can see we're having some similar technical repetition here as well. Now, when we're looking at EURUSD, the current area we're sitting at, especially if dollar stays bearish, is still a high risk, high reward buy area with potentials to start scaling up accordingly. Now we just want to zoom in more to the intraday time frames and adapt to current price action and market structure. Okay? Which is we have to come from here. This is the bearish structure that's been respected. What the hell is this? Oh. So pretty much you can see that with that continued stimulus support and the Fed's keeping the US economy in an accommodative state, that we're having that bearish structure on the dollar still validated, and obviously the equity market's continuing bullish. And we can see this nice bounce we're getting from these lows as well. I'm pretty much looking above 1.18 for buys and above 1.8400 buys on EURUSD, and a similar path that was just given like on GBP USD buy trade ideas as well. I would only be looking for the EURUSD sells. We don't have any Euro. Let me double check actually. I forgot to check that. Yeah, we don't have any Eurozone economic data until August 18th, Wednesday, 5 a.m. Eastern. So that's the Eurozone CPI, which is going to tell us more about the inflation figures, obviously from the Eurozone. What, somebody has a question? Oh, that's the girl that we roasted. Remember Ashland? That's just her different accounts. She's the one who copyright strikes all my videos. Yeah, she's just she's angry we roasted her that one time, yo. Don't pay too much attention to her. She's just an angry transgender lady. So she flagged a lot of our videos because she got roasted one time. Yeah, so yeah, she's held a grudge, yo. We be living in her mind rent free. I forgot she existed till now. She's the one who copy striked that last live stream I did because it had a video of her or had a picture of her and we roasted her. Yeah, we roasted the shit out of her. That's her. That's why she's laughing right now. Yeah, remember? It's all good. She's probably gonna like copyright strike this video for some random shit too. Yeah. Yeah, we could. I don't want to expose your private information, even though I got your email, address, all that stuff, because with their copyright strike, you had to give up your information, and I got that information since you didn't know. So, hey, what goes around comes around. Maybe not a day from now, maybe not a week from now. Yeah, but we don't have any Eurozone data until Wednesday, 5 a.m. Eastern. So we're mainly going to be looking to play this bias on EURUSD here. Alright, so far we've gone through gold, GJ, GU, EURUSD. Now, USDCAD. Yeah, I want to make this less than an hour, so I'm going to finish this up shortly anyways, alright? You can see the same thing. Dollar's primarily probably going to range until we have that retail sales data release, and especially after Jerome Powell speaks. But we're still respecting higher time frame bearish market structure in the last price sensitivity area that took us into these lows printed by sellers. So pretty much what we're going to be looking for here is a break below this order block here on the US dollar in continued weakness to start revisiting these previous lows around 1.2s, as the Canadian dollar is still holding a lot more strength with the correlation of crude oil being bullish. For those of you who don't know, a good fundamental confluence when you're trading the Canadian dollar is to look at how crude oil is moving. One of Canada's main revenue sources in exports is crude oil. So investors price in a very strong crude oil barrel price and translate that as Canadian dollar strength. So we've had a strong rebound, obviously, in the oil market. If you guys remember from the oil crash, we went to minus 40s due to a huge oversupply. I might release that oil webinar I did later this week for the YouTube audience. I just did an oil webinar yesterday. But anyways, we went from minus 40 market maker price setups on oil all the way back up to almost $70 a barrel now. So which means more profit margins for the Canadian exports, and the Canadian dollar has been a lot stronger, right? Especially with the US dollar weakness when we're looking at the dollar index. So all I see right now is the dollar in a range, but I'm still more in a bearish bias pretty much waiting for the sells below 1.25. And let's go more down to the intraday time frames here to look at the structure I want to show you guys. Okay? So you can see we had this bullish market structure from those lows being respected for an extended period of time until we had this aggressive break here. Since then, we've just been in this consolidation zone where it does get essentially very messy in this consolidation zone. If we can validate that US dollar weakness and the break and retest below 1.25, I'm starting to look for these sell plays on USDCAD, especially if oil continues bullish, which it does look like it will be, and we break below 1.25 and 1.24 higher time frame key levels, as well as have dollar index weakness. Okay? Last but not least, and the easiest, is US 30. I'm looking for either pullbacks to 35,400 buys, or a so I'm either looking for this, pullbacks to these area 35,400 bullish structure buys, or a consolidation zone at the highs and a breakout buys. Continuing to play the support of the Federal Reserve and running with the smart money and the market makers who have been riding the stock market buys ever since the fire sale pandemic crash prices. Okay? Now, I don't want to make this too long because it's not an actual trading stream or a live stream in terms of like a scalping session. This is more of a market update and recap webinar. We went through looking at some of the headlines and short-term market sentiment. We analyzed investor behavior, economic headlines, economic events and data to come, price action and technical market structure, and gave analysis for trade ideas on gold, GJ, GBPUSD, EURUSD, USDCAD, and the US stock market index. So this is going to be saved and you can always re-watch it. And then obviously we're doing our live trading session on Wednesday. This person just came, that's another account she has. Yo, this is that's dedication, you know. You put more effort into thinking about me than your own trading. That's probably why you're a photographer, right? It's probably why you're a freelancing photographer. I'm a trader. Anyways, everybody, thank you for attending. I appreciate the support. Make sure you guys like and subscribe. Rewatch the stream for all that fundamental and technical analysis and data. And then I'll see you guys during the Wednesday live trading session for New York.